Hey, what's up, YouTube? That truck doesn't run. I was just doing it for the video. But we're talking about taxes. Taxes. We're talking about taxes. Yes, Allen Iverson, we're talking about taxes and we're talking about medical insurance. Those are two big boogeymen that all these naysayers and Debbie Downers and skeptics and all these people who want to hold you down where they are, these company drivers who want you to make $40,000 a year, they're going to tell you you're going to have to pay more in taxes, you're going to pay for your own medical insurance, you're going to go broke. Listen to what I have to say. This was recorded a couple nights ago, but yeah, it's all my thoughts. Forgive me for rambling on, but when I'm driving, my thoughts don't come as quickly. I'm trying to pay attention to what I'm doing on the road. So enjoy the driving footage, listen to what I have to say about taxes and medical insurance, and see you guys on the next one. All right, friends, so tonight's video we're going to talk about taxes, and I think I'm going to couple it with insurance. Taxes and insurance when you're an owner-operator. This is one of the main boogeymen that skeptics who are company drivers are going to tell you, that you're going to have to pay your own taxes, quarterly taxes, and you're going to have to buy your own insurance. Now, I will tell you, they are correct. You are now going to be either, if you're on your own authority, you're going to be your own LLC, and you're going to have one way of filing your taxes. And then if you're a lease on owner operator, you're going to be probably a sole proprietor, and you're still going to be filing your taxes in pretty much the same way. The IRS views those things almost exactly the same. Let me say, I probably am going to say it when I record the introduction tomorrow, but I am not a tax expert. I'm not trying to give you tax advice. I just want to tell you guys what my experience is, so that you guys can know a bit of what my experience is. But please seek a real tax professional, a real CPA, and please seek out someone who understands trucking taxes, because most trucking companies use a CPA that specializes in trucking companies, because there's a lot of special rules and things that apply to trucking. So let me backtrack now. Okay, so yes, you're gonna have to pay your own taxes. You might even have to pay quarterly taxes. But think about this. The reason why you're going to have to pay taxes is because you're going to be making more money. Does that appeal to you? Do you want to make more money? I think you should want to make more money. Personally, I think everyone should make more money. Money for all. Money for all. Like Bernie Sanders, only you got to work for it. All right? Money for everyone. I want you guys all to make more money. But the fact is that when you make more money, you're going to get taxed more. Now, here's the beautiful thing about owning your own truck, your own trucking business. You get these little things called write-offs. And they take your revenue, and you have all these write-offs that you deduct from your revenue to get your taxable income. Now, once again, I'm not a tax expert. I'm not offering tax advice. I'm only telling you guys what my experience is. You deduct a whole slew of write-offs so that your taxable income ends up significantly lower than what your operating income is. So your gross revenue is going to be the amount that comes in just from like the rate, the load itself. And then you're going to have your operating expenses, your truck payment, your insurance, your fuel costs, your trailer either payment or rental, as it is in my case. Those are going to be your operating costs. After you pay all those, which depending on the rates that you're working and the freight that you're hauling, will be somewhere in the neighborhood of 40%, I would say between 30 and I guess some people could pay up to 60% just in operating expenses. So let's just say half your money goes to operating expenses. All right, give or take. Repair bills, all of that kind of stuff to keep the truck running, to put fuel in it, put tires on it, to pay for the truck, the trailer, and your insurance. You're at about half of your revenue is used up all on that. So of course you're not going to pay taxes on the revenue that you make. You're going to pay taxes after you deduct all of those things. But there's more deductions than that when you own a business. The interest you pay on your truck, your trailer, that gets deducted. I believe your trailer also. I actually don't own a trailer, so I'm pretty sure though that you can write that interest off. I don't own a home, so I know that there's something when you own a home that you can you have a deduction that I think is significantly better than the deduction that you get when you rent, but I don't know that because I don't actually own my home. But the other write-offs, like for me, the area in my home, my rental, that I use for my business office and for any business storage that I have, that area, when considering the area of your home, so whatever percentage of your home is used for your business, you can then write off that portion of your rent and even some of the utilities that you use that then go into operating your place of business, which is your home. So you get those. Any business related travel, you get to write off the mileage, and it's a certain amount per mile, like 50 something cents a mile or something like that, for like business travel of certain types. Let's see, what other write-offs do you get? You get any office supplies that you're going to use for your truck. Any cleaning supplies you're going to use for your truck. Uniforms, safety equipment. Let's see. Anyway, I'm not going to go through the whole list, but there's a whole slew of write-offs that all these different things that you are going to use for your truck that you then write off. And your tax professional will be able to help you figure out what is considered like an appropriate write-off and what isn't. And hopefully you have someone who isn't a crook, who's not trying to cheat the IRS, because you don't want to be in the business of cheating the IRS. But you also want someone who is knowledgeable and willing to give you all of their expertise and knowledge about what you can lawfully write off, and give you all the pointers that you need in order to get your taxable income. All right, so we talked about gross revenue, then we talked about operating in expenses and your operating profit, but then you have your taxable income at the end of all that. A big one that I didn't that I forgot was the depreciation on the truck and trailer. You get to write off a portion of the value of the truck and trailer each time, each year. Tractors for up to 3 years, and then trailers, I forget there's certain rules. Like I said, I don't own my trailer, so I haven't actually gone down the path of writing off a trailer yet. But I can tell you that a tractor can be written off for 3 years, a truck. You can depreciate it. And so that is a big write-off. And so that's something that doesn't come out of your operating expenses. That is just purely a write-off because it's depreciating in value. You're paying for the truck. And so anyway, I did mention truck. I guess that is the way that you write off your truck. You don't write off your truck payment. You write off your depreciation on the truck. And so that is kind of the benefit the tax benefits of owning your own business. And it's a reason, I'll be honest, it's a reason to own your own business. It's not a reason not to. Like I actually think that it's better for you and for your taxes than if you were just working a W-2 job and paying your taxes each check, paying your payroll taxes and all that. You are going to have, so I know some guys who pay quarterlies, and it's because they make a lot of money and they don't have kids anymore to write off and all that. So it kind of pushes them into a category where, yeah, they got to pay. But you know what? You pay right now, off of your W-2 check, and it's just, you pay less because you make less. So when is it like a good situation to make less money? I don't get it. And I'll be honest, you can write off more and get your taxable income down lower when you own your own business, own your own truck. So that plays directly into the medical insurance thing. Yes, you do need to find your own medical insurance. Yes, that is true. But I'll tell you that since Obamacare, it actually has made getting insurance for people with moderate incomes, I think, easier. I know some guys, they've had a hard go of it, and so, like I said, I'm not a tax professional. I'm not an insurance professional by any means, and I definitely only know what I know. But I'll tell you that my experience is that we have had better coverage and better premiums since we've gotten our truck, and we now have a pretty low taxable income, which then allows us to, through Obamacare, get the cheaper insurance through the state of California that allows us, or it's subsidized or whatever it is. I don't exactly know how it works. I just know that our premiums are very low, and our coverage is good and better than when I was a company driver and I had company insurance, and I had to pay however much per month just to have myself on it, and then if I wanted to add my family on, it was gonna be like $1,000 or something like that. I mean, it was just insane how some of these insurance, like it sounds good to have insurance through your company, but you usually have to pay for your family to be on it. And some of these guys are paying like, $400, $500 a month to add their families on to their insurance. And so, the company, no, that's right. No, it was like $300, $400 a week for their families to be added on. So it's like, is that really like a plus for being a company driver, that you pay like $1,000 a month for your family to have insurance, when you could get your taxable income down low enough to where you would probably get better premiums than that for your medical insurance if you own a truck? I mean, I'm not saying for sure. I don't know your exact situation. I know I've got 4 kids, and not everyone has a buttload of kids like I do. So my experience is going to be different than most everyone's. But in my one little bit of experience that I have, it's better to own your own company, use the tax write-offs that are available to business owners, and to get your taxable income down to where your medical insurance is subsidized. And I'll be honest, I spend less on taxes and insurance as an owner operator than I did as a company driver. I can just tell you that. So that boogeyman, I just crossed that one off the list. So stay tuned for the next boogeyman on the next episode of why you should become an owner operator. No, but okay, if you listened all the way through that, all the way to the end of this little rambling rant, then go ahead and type the word Atlas in the comments section, so I know you listened all the way to the end. And I don't know, I'll give you a virtual high five. We'll do high fives. I like that. Yeah, man. If you listened all the way to the end, God bless you. I love you. And all those people that cut out in the middle, they can just, wonder what the heck is going on and why we all are talking about Atlas. All right, talk to you guys later. What's up, YouTube?